Good morning. Welcome to ABC123 Trader. Today is July 30th, 2020. It's 20 after 11 a.m. Eastern Standard Time. And what I wanted to do is, I haven't done a video in a while, but I was having some requests of, different types of indicators, because I do build indicators and I try to look for analysis. So what I've developed, using, of course, other methodologies, the Ichimoku and Bill Williams with using his fractal system, and I was trying to hybrid the both into a certain type of system. So let's dive a little bit deeper on how to use the system. With that being said, let's start taking a look at it. What I'm going to show you is we're going to start from the bottom panel down here. And I want you to see what I was trying to develop. This main line here is an indicator such that giving you kind of a heads up of the way the trend is moving on the shorter term frame. Okay? The background, as you can see on the main panel, green, is suggesting the market's going up. As you can see here, and we'll get into the Ichimoku later here. Okay, as you can see, I do have the VWAP, volume point of control, the Ichimoku cloud, Bill Williams methodology of fractals, and also I modified the Bill Williams a little bit with a few other features added to it. Now, what we try to do is, because I was doing some research, people are asking me how to use the fractal system and how to use the Ichimoku system. And so I looked into it, and it can be for more of a beginner trader, or for a beginner to assist them to get into better entries for pinpointing trades. Now, how it works, if you're familiar with the Bill Williams system, is what you try to do is with these fractal points, and what a fractal entails means from a high point, the highest point of a swing, the two previous candles to the left going upwards has to be lower, and two to the right. So 1, 2 here, and 1, 2 here, which will entail a fractal. Vice versa, a fractal, a swing low with two previous candles higher and two candles afterward that are higher as well to entail a fractal low. Bill Williams, he uses the alligator. I was researching, and I should have put the alligator on here just so we can look at it. And so what he looks for is, once there's a momentum upward, there's a fractal high, and you could put a trade in on the fractal high the first time, the fractal high the second time, on a continuous pattern going up and down, up and down. Well, when you're futures trading, unless if you're doing E-minis, it can be very, very risky, such that on a Bill Williams system, which does work, I've tested it, from a fractal high to a low, that's $1,000 swing here, and I'm not sure if you can, or this would be a lot lower on or right here at the previous fractal. So I'm not sure if one can actually have that type of risk and reward. So when I was developing it, I was saying, okay, it does work. There's no doubt about it. I tried their Weiseman 1, 2, and 3 theory, and Weiseman 1 was once, you know what, I'm going to add the Williams so we can just get an understanding how the Williams work. Or the alligator. Let's just do the Weiseman alligator. Just as the regular setup. He has lips, mouth, and teeth. I think the teeth is a red. Of course, and I can't remember which one's which, but whatever. But basically is same thing like even with Guppy. When it's consolidated, you have a whole bunch of lines here in sleeping mode, and when the mouth opens up, you can see there's to the buy side, and when it opens up to the sell side, like moving averages. He shifts them such that through his methodology, and I won't get into the science on that one. But basically what it is when there's an extreme swing down and of course a price action resistance, of course she's going to snap up and a fractal will be formed. And what he says on Weiseman number 1, and I'll type it in here, right here, this will be Weiseman 1. Number 1 means you put a counter trend trade here and work your way up so you can make some profit. Weiseman number 2 from the top here would be the third bar in, so from the high or from the low, so this is 1, 2, third bar in reversal, you would be putting Weiseman number 2 in. And then Weiseman number 3 would be the next fractal on. So there is a possibility that you can make trades here. So on Weiseman 1, you make some profit. Weiseman 2, you make some profit, and then she starts breaking down again, and fast forward, you know, etc., etc. And how his methodology is once you're doing bifractals, you have to be above the red line, and if you're on selling fractals on normal trending times, like this one right here, you're below the red line, so you can put your price point here. So they're basically breakout traces. That's his chaos theory. Okay, so I want to clean up the screen a little bit, so I got rid of that part for the trending. And so what you can see here, this yellow line is actually doing a calculation of how far the spread is from the price point from, I think I can't remember, through a Weiseman moving average. So when there's a super deep retracement, and you can see it down here, you know there's going to be a snapback. So what you're going to find out, depending on what type of instrument you're trading, I'm finding out on the NASDAQ here, if I have it over 20, I can get a good bounce back. So when I see a line and a bounce back at this time, then I know I can take a counter trend trade. You can also use this as convergence, divergence as well. So this is what this was designed for. Now when I built the chart here, or this marker, how I use this system, and I'll add it with the Ichimoku, is I will look for, of course, the swing highs and lows, and I'll also look to see if the momentum is changing. So I can get in, maybe it all depends crossing the VWAP and everything, but at least now I know I have an opportunity to get in the proper trade. Because if I get in down here, let's say if I am trying to trade down, I'm not going to talk about backgrounds here, I don't want to be this far down on the momentum to try to get a trade. I'll have to wait for a retracement for continuation, and vice versa. So when you're seeing this swinging down to the bottom, like, you know, we got the super extension past the 20 line, bounce back, you can take your trade up. So you know that's your snapback, and here I have some momentum working on me for a while, and as soon as I see it die out, I can close my trade. Okay, now what you're going to also notice on the fractal system, what I try to do now, this is getting into the Ichimoku, and what we're going to do, actually we're going to start on the Ichimoku. So if you don't understand how to trade the Ichimoku, the most conservative way, let's say, is the four pieces are on a buy. Make sure I guess they call Tenjinsen or Kijinsen. I'm not going to use the words here, but basically is when this minor cloud that I created using Ichimoku mathematics, once it crosses up, this is your buying opportunity, and this is basically your trending upward opportunity. So once it crosses up, you have an opportunity to get in. Okay. Parameter 2 on a bull trend is you want to be above the cloud, this main cloud. This is our momentum cloud. That's rule number 2. And most aggressively, rule number 3 is you would like to have this line here, I think it's called Chico span, this line above your price bars. Okay? So once you have, if you're above the cloud, or if you cross over and you're above the cloud and this price point is above, or the Chico span is above your candles, then you have a great opportunity to enter a trade. So because this line here is actually the reflection of this actual closing price, this is how it's drawn. So we're back, I think it's 26 bars. Let's create an arrow from here. Okay. Now, when this crosses over, right here, that's where the line actually is, right at this zone here. So basically, you're above the line, or I mean, you're above the candle, so you're passing this rule number 1. Of course, you're above the cloud, number 2, and number 3, it's saying go long. Now, what I created is I created an extra little bit of mathematics into it with a little bit of Fibonacci as well. As soon as this crosses over, we don't know how fast this run is going to be, because we're breaking the cloud. We broke the cloud. There's a trade-off there, and then now you got double confirmation here. And then what it will do, using just a couple of algorithms, I'm going to also verify a fractal, because when a fractal comes up, there's always a retracement. And what I want to know is if it doesn't take off, and this is kind of delayed, because once the fractal is formed, which takes a couple of bars here, I just created a box here. And what I want to know is if it's going to enter the box, kind of hold position, and start taking off. I want to get a deeper retracement entry so I can get a better return. So what you want to see, it will happen all during the crossovers. Okay, so it crossed over here, but this marker took off like crazy. And until the fractal was formed, then it's going to start doing a Fibonacci retracement between these two fractals. Try to find out a price point to see if we're within that zone, a deeper retracement because it's more volatile. Let it do a deep retracement and see, as you can see, the bottom fractal here, so we don't get in a bad trade. Then we can get in and take a deeper run. That's the key. So we can do that over and over again. So we don't want to get in bad trades. As you can see here, an early entry, the momentum has changed to a background of green, which is a good thing. We had the Kijūsen, or the Tenjin Kijūsen, crossing over as well. We were above the price point, but look at, we went below the price rate all of a sudden here because it just took off. Then we want to see if it was going to continue. So it retraced, a very shallow retracement, and then the bar started turning green. So you could have took an earlier entry, maybe up to the VWAP. Okay? And you can do that over and over and over again. Okay? So how this system is developed, all I wanted to do was create a simple system. See where we are, $2,400. Okay, so it is working on my system here. Okay, I'm going to close this for now. So what I want to show you is you don't. It was a volatile morning, so if you're afraid to take the morning trade and just be a little bit patient and wait for your sit-up so you can get in. And what you can also do is you're using experienced traders' methodologies of the Ichimoku plus Weiseman fractals, and also some extra little bit of logic using the volume or the VWAP. And I'm using some of my own algorithms of momentum and day trending. so we can be on the right side of the trade. So early in the morning, market looks like it was going down. It took off like crazy. High volatility. It looks like, okay, the day trend was failing. This yellow line here, super deep retracement to make sure we're hopefully on the right side of the trade. We were watching it vibrate for a while, and I'm starting to see it was going away from this, which is great. And the day trend activated so we can get in a deep enough trade for a longer trade. Now, if you want to be conservative, we actually have to wait till we break the cloud. This is part 1 breaking, part 2 breaking. Now we can enter. You could break in early here, wait for a retracement if you really want to, or a deeper retracement. It is all up to you, because it doesn't look like it's much. But if you're kind of worried, a little move like that on a especially volatile market is a $600 move. That's why I was trying to pinpoint it as much as possible, wait for the expansion, return. Now let's take a look at the larger swing, and then I'm going to go here. Fibonacci retracements. 61.8% retracement. There you go. And with that 68.1 retracement is we had 1 fractal, 2 fractals, 3 fractals. So, you know, ABC, you know, or A, B, C, C equals D. So other than that, if you have any questions, feel free to email me at ABC123trader.com. If you want to test drive this, I'm going to actually put this out pretty soon. I still have a little bit of more coding to do. I have to clean up some of the options in here. I'm done the Ichimoku and all the other ones. So I'm going to create a mini package so you guys can play around with this. And I'm also going to add on this, I want to put the baseline on there, but baseline separated. But what I'm going to do is I'm going to probably put on for sure. No, I won't put that on there. I can't. But what I'll do is I'll put high volume bars on there. So, yeah, because Delta, if you don't own, yeah, I'll have to do that. High volume bars, maybe. Let's see what we have here. Ichimoku. Oh, leap tracker. That's the one I wanted to add for sure. So with the leap tracker, there we go. Oh, sorry, made a mistake. Give me a second here. I just want to add it for you. I have to add this leap tracker. This one I'm back testing. There we go. There's your leap tracker right here. So we wanted to see if we're getting on the right side. And away we go. Other than that, if you have any questions, feel free to email me once again at ABC123trader. Thank you very much for watching this video. And you guys have a great day. Take care. Bye.